WNIS, Mr. Scott Forehand. What's up, man?
Hey, man, thanks for playing that song. I'm happy to be back. And here's something, I was listening to that song, and there's a rhythm guitar, okay, and it reminds me a lot of Niles, and I can't remember his name, rhythm guitar player. The guy played with a bunch of bands, but he also just recently did that part for Daft Punk on one of their things with
Nile Rodgers.
Yes, that guy. He's a phenomenal guitar player.
Yeah, he is.
And I've always wanted to be able to play guitar, and I actually tried, and then I realized it requires something I don't have, which is called coordination.
Oh,
yes. So I have
really
no.
Need that?
Yeah, apparently so. And I just thought you just strummed the guitar and it made sound, and that's what it does. It just doesn't make good sound unless you know what you're doing. I don't know what I'm doing, but yeah, man, that's one of my favorite songs. I love that song.
Peter Gabriel from a great record too.
Yeah.
Which came out in '86, I believe.
Yeah, something like that. 86, 87.
Great record from start to finish.
Yes, and also that stop motion animation video that he did
for Sledgehammer.
Yeah, which was awesome. Yeah.
Fun fact: that is the most played music video in the history of MTV.
Is it really?
You would think it would be Dire Straits' "Money for Nothing."
Yep.
I want my MTV. That was well played, but no, it was Sledgehammer was number one.
Are you sure it wasn't Video Killed the Radio Star by the Boogaloos?
That was the first one.
Yes.
The Buggles.
The Buggles, that's
Buggles.
right.
That was the first one, but no, that wasn't the most. But that would be a good guess. If I asked you what's the most played, that wouldn't be a bad guess.
Yeah, it's had the most time.
That's right. That's right.
Well, all right. So I roped Tommy into coming on the show with me today. We call this, in my parlance, we voluntold him.
You had to make a few threats.
Yeah, well, but Perfect Home Guy is about renovating homes, but hearts and minds too. With that book coming out, and you are a mind renovator. Scott, you just provide the details and the facts that help people make the best financial decisions for their long-term wealth.
Right on. I appreciate that, man. And also, you've got some other stuff that you do that's helped my company and a lot of my clients recently, especially with. And I'll give you a chance to talk about that a little bit later. But tell me about your book. You got a book coming out. What's the deal?
Well, it's kind of 40 years in the making. So maybe I am a procrastinator. But then the timing is perfect, and so. This year, the launch is supposed to be The Wizards Don't Know. A Yellow Brick Road from fear to love and truth.
Love it.
So, yeah, everybody in this world is motivated by fear. People who don't make good financial decisions are motivated from fear. People who don't renovate their houses, even when rates are below the national average right now, are motivated from fear.
Yep.
And so we just educate people to stop staying where you are, stop being mired in your fears, and move forward. Because personal growth, with personally, professionally, financially, that's what we're all about. That's what we should be doing every day.
Right on.
And consulting experts like you.
Thanks. That's 2 plugs for me, 1 plug for Tommy. Good stuff. All right. So, and not that I want to get religious or anything, but if you're a reader of the good book, then you know where that emotion of fear comes from, and you should just ignore it because it's not from a place or from a thing you want to talk to.
Actually, Dennis Waitley, who I listened to back in the 80s, he used the acronym FEAR, false education appearing real. And the majority of every single thing that we use to motivate us negatively with these fears is usually false education. And there's only one fear that we're supposed to have and never get rid of for the best life possible, and that's fear of authority. Fear of authority is what keeps society civil. And without fear of authority, there is chaos and anarchy, and that doesn't get any of us.
You got the Middle
anywhere.
East.
Yeah. So yeah, taking time to know and understand what these concepts and principles of love and freedom from fear is what the Wizards Don't Know is going to be all about.
Well, I'm excited.
So, if people go to perfecthomeguy.com, you can register to get the early edition as soon as it's ready for print.
And what do we have to do to get a signed copy?
That will be something that actually just going online and registering, just getting on the email list there, is going to let you know about that. And yes, I'll offer opportunities if people share, for example, on their social media. We're going to get some free signed copies out there for,
Awesome.
for those people who help promote that. So there's an excerpt right now that's a free download, perfecthomeguide.com. So just search for the book menu within perfecthomeguide.com.
Awesome. All right. Well, thank you, Tommy. Thanks for showing up. Thanks for allowing me to volunteer you to be here. And so now we're going to start with what we normally do is we do some chart analysis. This is part of anybody who's in the market should understand how to do. There's two different primary kinds of analyses that you do. You do technical analysis and you do fundamental analysis. So this is not fundamental, this is technical. So all I'm doing here is I'm looking at the charts and trying to divine from the charts what that's telling me in really general a general perspective. So everybody's been watching. You see what's going on with the tariff stuff, all the negotiations that Trump is doing, and all the stuff that's being pushed back from one side of the aisle versus the other, and everything's starting to come out. It's starting to flesh out, and some changes are happening. So if you're trying to divine where things are headed from a technical analysis, we start looking at what the future tells us. So there are futures that are out there, and there's a primary indicator that we follow, which is it kind of boils everything down together into one thing. And we're talking about T-bonds, because the T-bond and the T-bond yield is where institutional investors and large investors put their money, because it's safe, because we know that the U.S. government and the U.S. dollar is something that's a standard, and it's going to be around for a long time. And we're going to continue, we being the Treasury Department and our federal government, are going to continue to make sure, hopefully, depending on who stays in power, make sure that the U.S. dollar stays the standard, or at least as much as we can. There was an interesting piece of information that came out. I talked about this earlier this week on CBS about about what just happened with BRICS. That's the effort to have an alternative international currency, and the efforts of some of those BRICS members, mainly Russia, China, to try to get rid of the U.S. dollar and de-dollar. This is that process of de-dollarization that we're talking about. And one of the interesting things that just happened is one of those big members of BRICS, which is India, who is one of our main trading partners, India, who is the most populous country in the world, India, who is the fourth largest economy in the world, just told BRICS that they're not de-dollaring. They're going to maintain the U.S. dollar as their standard, and they're not making any plans to change. So when that
Hallelujah.
happens, yeah, I know. So that was a huge, Russia's never going to say that. China's never going to say that. But now you got India. So now you got the largest and the fourth largest trading entities in the world that are going to be using the U.S. dollar, which those two combines for about 70% of the world's economy. So dollar's not going away, folks. De-dollarization isn't happening right now. The sky isn't falling. Everything's going to be fine. However, that being said, there's still some sentiment. And this is going back to that T-bill conversation. So the 30-year T-bill yield, the T-note, is something that it's a main. There's two primary main evaluations of future expectations. And that's the 10-year and the 30-year. The 30-year is down, okay, which is significant, but not greatly significant. The 10-year is flat. That is significant in that you've got long-term investors thinking that the performance of the U.S. dollar is going to weaken. You've got mid-term, long-term performance investors thinking that it's going to be about flat. So there's, in general, what you're talking about is kind of a partially negative sentiment for future performance of the U.S. dollars, what that comes to.
Isn't that the index for mortgage rates? I think it is the 10-year. I think
Yeah,
the 10 years. The 10-year bond is index for that.
Yep. So
They are- yeah.
that's good news, kind of. And we'll talk about that in just a minute because I do want to hit on that because that's part of the U.S. economy. Is the real estate market is 1/3 of the U.S. economy. It's also what drives the U.S. economy. But we'll get to that in a second. So next thing is currency. So there's some stuff that came out, and this is really great. You heard that the U.S. just did some big deal with Great Britain. And now, what happened when that happened? Well, the trading rate of the British pound versus the U.S. dollar, the U.S. dollar is at an all-time high now, based on that change, based on that one thing. That means by making that deal, our dollars, not that we buy a lot of stuff from Great Britain, but our dollars are now stronger against the British pound. Okay, that's great news, right? And then what else has happened? The euro. The European Union is pushing away from us, and that's fine, okay? But what's happened? So the European Union dollar is now weaker against the U.S. dollar by doing that. And it's not weaker by a little bit. It's about 0.74% over a week, that's a huge number of change in 1 week. And it's at the top end of their trading, like there's a band that they trade in. It's at the top end of that band now, which means it's probably going to cross over into a new high, which means the U.S. dollar is going to be even stronger than it was in the European Union. This is all pointing to a very positive, which is what Trump's trying to do, a very positive trading environment for the U.S., not for everybody else. America first, right? That's what he's trying to do. So he's following through on his promises, which is pretty exciting. Okay. Got a couple other things to look at. And this is something Tom and I were just talking off there about this, and we were talking about where's the money moving to. And so if you take a look at the primary sectors in the U.S. economy, where if you look at the stocks that are indicative of a certain sector, like energy stocks would be things like Phillips and Exxon and those kind of guys. And if you're looking at consumer defensive stocks, those would be things like Hormel and Coca-Cola and McDonald's. Okay, these are things that they're big, massive companies. They're going to be there for a long time. They don't move up and down a lot, but they're always stable. That's a defensive stock. So if you look at all the things where people are having, where certain sectors are having gains, there's 5 primary areas. Real estate's one of them. That's very good news for the economy. Utilities is the second. So utility stocks are typically going to be stocks that are going to have a dividend associated with them. So they're good investments for long-term cash flow. So that's a good tool there. And then you're looking at basic materials. That's actually a defensive buy. So if you're looking at basic material pieces, that's the basis of an economy that is doing manufacturing. So basic materials means that there's this mindset or this thought that the U.S. economy is heading back to industry, which is falling exactly in line with what Trump's trying to do and bringing back production to this country, bringing back manufacturing. All right, and then here's the biggest thing. The biggest gainer, the number one, was actually consumer defensive stocks. So why is that? What does that really mean if you dig into it? If you have this economy or this country, this mindset that is focused on buying stocks that are in a defensive position, that means that there's a level of fear. We talked about fear in the beginning. There's a level of fear that if you invest in these other things, in technology, in pharmaceuticals, in any other type of arena other than what would be considered a defensive stock, that you might lose money, which means people have lost faith. Okay, I don't know that they're wrong or right. I'm just saying that's what the numbers say. So that's what the technical analysis says. So you have this general feeling of malaise, even though the market's way up. You still have this. If you look at where the money's going within the market, what is it really telling you? Okay, so that's the first thing that causes me a little bit of pause about the investment. We've seen a run up in the market since January of this year. We had a big drop, and then we've recovered that drop, which is awesome. I don't know the future, and I'm not going to make a suggestion on it, but I do know that there's a sentiment out there that is thinking that there's going to be a downturn. All right. Now, if you look at where the money went from, okay, so where did the money that went into these consumer defensive stocks come from? So some of it left the market. We'll talk about that in a minute. So the part that didn't leave the market had to come from some other stocks. So some stocks win, some stocks lose. So in this particular instance, the consumer defensive stocks were the big winners. That means there's a sentiment of transition towards having a downward economy. And the places that it came from, the number one place is a consumer cyclical stock. All right. So there are things that you can do every year that follow cycles. Like you can know that like an energy stock, especially a gasoline producer, for example, is going to have a run up in stock price in the summertime because people are traveling more, they're buying more gas. They've switched over from what's called winter gas to summer gas, which is more expensive to produce. So you have this trend. That's normal that you're going to see a run up in the consumer cyclical stocks in the summertime, especially with energy. And guess what? It was the number one loser. It's exactly opposite of what you would think, which follows normal trends. So the consumer cyclical stocks are depressed. The second thing is healthcare. Now that's obvious because of what's going on with pharmaceuticals and what's going to happen there, hopefully at some point for everybody, and that's understandable. But the consumer cyclical stock is the thing that causes me the most pause about where the money came from. It was the largest loser of that. What do you think about that, Tommy?
I'm getting more and more knowledgeable about this. Never heard about cyclical stocks or whatever, but I know that so many people, even whether it's the stock market or real estate, there is a lot of fear out there.
Sure.
And this fear is keeping people from making good decisions. But you made a comment a second ago that one of the still strongest markets to have your money is real estate. So
yep.
There are so many of you listening right now who are sitting on the sidelines, and you're staying in your same old house that needs renovation, or maybe you just need to upgrade because your family's getting bigger, whatever it is. And you're just sitting there. You're thinking rates are too high when the 50-year American mortgage average is 7.3.
Yeah,
and we're in the sixes.
I know.
We're in the sixes, but it's
still a discount.
It's really a discount, and it's people who made a ton of money through their real estate ownership got there because real estate investments, location is still the number one rule, have grown that investment, and then they've cashed it out. I'm looking to hopefully cash out a condo this summer also that's grown, a lot of money. So, and then we're going to reinvest that.
There you go.
But bottom line is we're taking advantage. And
Don't forget your Starker Exchange, people.
We're not being scared of the rates because the rates are – when I started in this business in 2003, the rates were 6 and 7% all day long. People were buying and selling real estate, and for some stupid reason, it's media-driven. Media-driven fear is not valid. It is one of those false educations appearing real. You should not be staying out of the market. You should be going to Perfect Home Guy and letting me connect you with the right lender anywhere in the nation, by the way. So it's not just Hampton Roads. I connect you with the right full-service lender that can help you have all the product options you can imagine for seniors, first-time home buyers, fixer-uppers, whatever it is. So
yeah, I will just to give Tommy a plug on that. I've had a couple of clients that I've referred to Tommy, and they've really produced stellar results. So his ability to deliver on what he says is absolutely true.
It's about knowing what's right for that client. I was talking to a mental health professional last night who provided a need to renovate his home, and there's 3 different products I can put in there for him. And So he talked to the right person, because all the other bankers and credit unions don't even offer it, don't even talk about the different options that that I have been able to provide for your clients.
Good stuff. Right on. So, folks, if you're on the sidelines as far as real estate is concerned, that recognize that there's a lot of people on the sidelines, and this is a Warren Buffett thing. Don't do what everybody else does.
Mm-hmm.
Okay? That's how he made all his money, by doing things that other people weren't doing.
There's less competition because of that also. And there's so much opportunity, especially if you buy a fixer-upper house, people. That's where the big bucks are. I've seen people close and
wait, Tommy, is that something that someone could use a future value mortgage for?
A future value mortgage means they can buy it, and it will likely appraise for more than they purchased it for, to include the renovation. Right. And you're missing those opportunities because you haven't been a perfect home guy to get us connected.
Right on. Yeah, those are great deals for anybody if you're wanting to get into that market. I've got a client out in Franklin who does that, and I think he's up to 22, 24 properties at this point. Mm-hmm. And it's one of those things. There's a process that you can go through, especially in the real estate market, which is the same thing you can do in the financial retirement market. It's just, how do you get an investment to turn over and then put it into an investment that's going to use even more? Mm-hmm. And the interesting thing about the real estate is that you can actually get a cash flow property that cash flows you to a point where you can leverage the property again and then go buy another property, and it's called daisy chaining. And that's an interesting real estate process that we also utilize. Not daisy chaining, because real daisy chaining is illegal in the financial markets, but we do a process that's similar to that is legal. Mm-hmm. Yep, good stuff. All right. Last thing I want to talk about for a technical analysis piece is something that I have a lot of clients asking me about. It's becoming more and more on the tip of everybody's tongue, and it's becoming something that more and more people have interest in, rightly so, and that's the crypto markets. So there was a question that was asked a couple of years ago, is crypto going to replace dollars? And of course, everybody that was a financial person at that point said, oh no, it's not real, it's false, it's fake. And I'll raise my hand and say I was one of those people too.
Okay, 2012, I think it was. I got an email that talked about, Benjamin Franklin.
Yeah,
that pointed to currency that the government couldn't control. And yeah, my mother and I were thinking about buying Bitcoin at $100 a coin back in the day, and I didn't know how to figure out that stupid digital wallet thing, which is what kept me from doing that.
I got in. I bought one. I bought $500 of the Bitcoin in 2008, and saw it went up a little bit. It actually doubled or tripled, and I sold it in 2012. And I wouldn't be doing this. I wouldn't be doing this radio show right now if I kept that. So, anyway, it is what it is. Hindsight's 20/20, right?
That's right.
None of us have a crystal ball that works, and we can always have that backward focus that makes us feel bad. So, crypto. So what's going on? So if you talk to most crypto investors and you ask them about what they think are the top crypto coins available, and which ones are probable to become a standard somewhere, you're going to get, if you talk to 10 different people, you're going to get 10 different answers. And I don't know that any of them are right. And but what I can say is there's some interesting things going on. Right now, Bitcoin is at 109,215. Okay, so if you listened to the people like Robert Kiyosaki, who said, like Robert Kiyosaki, in, what was it, 6 months ago, maybe 5 months ago, when crypto was down below 70K, and he said, buy everything you have, put everything you have in it. If you'd done that, then you'd have a 200%. Is it 200? No, it's almost 55% gain in 6 months. Very strong. Is it going to go higher? Yep. How fast? I have no idea. Nobody knows. You were just talking about a minute ago, Tommy. We were talking about you and your mom, and you're talking about fiat currency, and that's what Franklin was talking about. Mm-hmm. And we didn't have fiat currency until who was that?
Nixon
took
yeah.
us off in
Took us off the gold
70,
standard,
whatever.
yeah.
Yeah, took us off the gold standard. So there will be something. I don't know what it's going to be. We know, as I was mentioning, Bitcoin's at 109,215, which is down 1.7% from its high. Ethereum is at 2573, which is down 3.49% from its high. The other big ones that people talk about are XRP and Solana. Both of those are down. So all the big ones are down. There's only one that's actually coming up, and there's a specific reason why, and it's called Tether. And the reason why that one's up is because there's an underlying technology that's associated with that particular coin. And that underlying technology is what's, at least the plan is, to become integrated with the U.S. markets to be how do you call it? It's a tool to handle the trades in the U.S. market. And it's one that's going to be, in theory, it's going to be recognized. There's two big moves that happened recently with crypto. One, Ecuador was the first country in the world to go to Bitcoin as their main trading valuation. So they said we're going off the U.S. dollar, we're going to Bitcoin. Okay. They just went back to the U.S. dollar. Didn't work out so well for them. The other is New Hampshire. New Hampshire was the first state to adopt and codify a specific portion of their state budget to be held in a cryptocurrency reserve. So that just happened also. So we've got some traction happening here in the country. There's I read an article down in North Carolina that North Carolina is moving towards creating a crypto reserve as well. So I think that's going to become the standard across this country over the course of the next 4 or 6 years, that most states are going to resolve to have some kind of cryptocurrency reserve, which is great for that piece. So they'll be able to capitalize. It's just the question is who's manning it, who's deciding which ones of the crypto, the hundreds and hundreds and hundreds of coins that are out there that you invest in. And I don't know that there's an answer for that yet, but if we hear, we will tell you about it. So, where are we at, Lee?
Where are we at?
Yeah. Where do you think we are?
Are we at break time?
Are we? We might be. I think we're there.
It's your show, man.
Yeah, so we're going to come back in just a minute, and we're going to talk about some investment strategy, some alternative investment strategy. We're going to talk about some real estate.
And we want you to call in at 627-7979 so you can ask Forehand Agency. Scott Forehand is not only an expert, come on, another shameless plug. He can't blow his own horn, so I'm going to help a little bit. But he designed the retirement plan for one of the national sports leagues, and we can't say who that is, but this man knows his stuff. He creates, he designs for you personally something that will save your assets from taxation and loss.
I like the way you said that. Save your assets.
Mm-hmm. Yes.
Can I say that, Lee?
Sure.
It is exactly appropriate.
Like I've taught you, you can say anything you want to on the radio once. Plugmaster Tommy Hines. Perfect Home Guy Tommy Hines is with us. Check out his website, perfecthomeguy.com. Scott Forehand, forehandagency.com is his website. His numbers, if you want to reach him directly, 757-278-1264. If you're outside the 757, that would be 800-677-0989. And as Tommy said, we are live, we are local, we are here for you, so join the show. 757-627-7979. If you're outside the Hampton Roads area, that would be 888-756-7979. Scott Forehand and Tommy Hines with us on News Talk 790 WNIS.
Hey, Lee, I just wanted to give a plug. We've got this this thing that we do, a class that we teach once a month. It's usually the Thursday immediately following this show. So the next class will be Thursday at 5:30 p.m. from 5:30 to 7. This is where we talk about infinite banking, infinite bank strategies, and the debt-free life program that we use to get people out of debt in usually about 7 years or less without you spending any more money than you're already spending. That being said, this Thursday's class is a specific focus on how to use these infinite bank strategies as a business. So, for example, I have one of my clients who owns a trucking company, and before he met me, he was buying about one new rig every 2 years. So he was slowly growing fine. But when we started incorporating an infinite bank strategy into his business process, he was able to start buying 2 rigs a year as opposed to 1 rig every 2 years. So it was significantly increased. And that young man, I say young man because he's in his 40s now, that young man, when we first met, was $590,000 in debt. And we were able to get him completely out of debt, and he is now completely out of debt. In about 5.5 years, maybe 4.5 years, I can't remember. But he's completely out of debt now, and the business is rolling, and he's almost able to. He thought he was going to have to work until he was in his 70s to retire, and now we've got him to the point where he can retire in his 50s, and he's going to be able to retire with an income that's bigger than what he's got now, way bigger.
So what you just spoke to just then is the fact that our listeners out there, we all have children or grandchildren, and majority of us are relatively mature in our 50s, 60s, 70s, whatever, in this audience. But we've got to convince our kids to get with somebody like Scott at Forehand Agency, because when you start early, this compounding of being able to double your asset value in the shortest period of time is superior when you start early. And everybody's got the wrong priorities. They've got the wrong thinking. They've got the wrong priorities.
And they don't get, here's a big thing. People don't understand that a big thing that affects people's retirement is tax. And if you were listening to the show that came on earlier, that gentleman was talking about doing Roth conversions and stuff like that. And why is there this big push for financial advisors to do Roth conversions? It's because it helps you avoid tax. I'm not convinced that a Roth conversion is something everybody should do, but it is something that's out there that can help you avoid tax. Why is that a deal? Because tax kills you. And if you can do anything to avoid, I'm not saying anything illegal. I'm saying if you can do legal things and use legal remedies to minimize or mitigate some of your taxes, then you should. And that's what this program is predicated upon, because all the money that goes in this program and all the growth that happens in these programs is tax exempt. There's no RMD. You can take the money anytime you want, anywhere you want, for whatever reason you want. So that's how you can retire at 55 or 50, because you can't do it if you're relying on traditional retirement programs that require you to be officially retired at 62 or 65 or 67. You can't take money from those, from Social Security or whatever like that unless you're injured and on disability. So that's what these programs are designed to do. They're designed to help you retire when you want to retire, not when the IRS says you can retire.
So I'm going to speak to our seniors out there in your 70s and 80s. You should be already communicating with Forehand Agency, because he's going to show you about this required minimum distribution taxation that you have on those beautiful assets that the government provided for you, or whatever your 401 was, and they're making you take this money out and you're paying a ton of taxes on it. Scott shows you how to protect that. Those of you who own real estate and are selling real estate, you have capital gains on those things. Scott will show you how to save those capital gain taxes from being paid and invest it in vehicles that are going to return greater investment than giving it to our government.
Hey, Tommy.
Yes, sir.
If I could show, let's say you have $500,000 in a 401k, and you know that you're going to have to pay tax on all that money at some point.
Yep.
If I could show you a way that you didn't have to pay tax on any of it ever, would you be interested?
That's why I'm your client, Scott. That's why I like plugging and promoting what you do.
The plug master.
Tommy Hines. You're one of the wisest and knowledgeable people. There's a lot of people, on this station plugging financial advice, and that's awesome. And everybody's got their own niche. But you just rise above virtually everybody else, is what I've seen and heard.
Well, now I'm going to give a plug. All right, and this is crazy. So for some of you know that I moved, and we now live about an hour south of here in a beautiful town called Edenton, North Carolina. So there's a baseball league down there called the Albemarle League, which is, I think it's single A ball. And these are, top college players that come and play for about 6 weeks at local area small town teams. And so the Edenton Steamers
Yep.
is the Edenton team, and they have their first game this coming Thursday night. I told them I was doing my DFL, my infinite banking class. It wouldn't be over till 7, so they've agreed to hold off until 7:05 to start their game. So their game starts at 7:05 on Thursday evening. So if you get a chance, you want to go down and see a beautiful town, have a small, an event or at a small town baseball diamond and just have that small town feel. It's a great place to go. Very family friendly.
I've been to many of those games down there at that stadium, and you feel like you're in the movie Bull Durham.
Yes. Yes.
You do. It's amazing.
And that's Hicks Stadium, which is that's a historic stadium. It's been around since the 1930s, and it's really, really cool.
It's awesome.
Yep. So that was my plug for Edenton Steamers.
And the Peninsula Pilots have a similar old stadium.
I think they're in the same
Hampton.
league.
Or are
Actually,
they in the
they
same
are.
league?
Steamers.
Oh.
Yep.
Yeah.
And actually, they're playing Greenville's team this Thursday night, but the Virginia Beach team is coming down there on Saturday.
Yeah.
So I'm pretty excited.
Where does Virginia Beach's team play? I've yet to go to their stadium.
I'm not sure.
I'm not sure. I have to look into that.
Maybe it's like Tallwood High School. I don't know.
Maybe something like that. Minor league team names are the best.
Yeah,
Edenton
they are.
Steamers.
It's awesome. And their mascots, 2 clams.
Yeah, that's right. That's right.
All right. So that's this Thursday. The DFL class followed promptly by the Edenton Steamers opening night at 7:05 p.m. All right. So
And if people want to get info on the class, they just have to hit you up for an invite.
they can. You know what? And we just bought our season tickets, and it broke me. I just spent almost $100. So yeah, tickets at the ballpark are $5 each.
Yeah. Yes.
All right. So now we got a few minutes left. I want to talk about a couple quick things. You heard, and you're hearing, and again, I've already mentioned this, Roth conversions. In my opinion, there's a better thing to do than a Roth conversion. And it's something that everybody should have. And it's a tool, just like a Roth is a tool. The problem with a Roth, though, is that a Roth, if it's invested in the market because you want it to make money, it can lose money. So that's the risk position. So what if there's a way that you can get the benefits of a Roth, of having money invested in a market and not having to pay any tax on the gain, but you don't have to have the risk of losing? So you can get all the market gain and none of the market risk. That, folks, is what's called a Roth annuity, and it is something that everybody should have in their portfolio. It is not the thing people should have. It's a thing.
I have
people
a
should
thing. I have that thing.
There you go. The Roth annuities are great.
Because I'm smart because I listen to you.
There you go. Come on, another plug. Wow. Are we keeping the plug count going here, Lee?
I think we're into double digits now.
I think so.
I think
Right
he's
on.
got a double-double.
Right. Very cool. All right. So, folks, a Roth annuity is something that you should be talking about with your financial professional. And if they're not familiar with a Roth annuity, then you need to think about maybe getting a new financial professional. I'm just saying. It's a tool that people should have. All right. And then we've also got the IBC, which is kind of a Roth program, but it allows for dual purposing of dollars, meaning that you can have money invested in an asset and then use it in another asset somewhere else. That's dual purposing. And that is as far as I can tell, as far as I've seen, as far as I know, that is the only investment of its kind on the planet where you can have money invested in more than one place at the same time, the same dollar, earning 2 different sets of interest rates. And then finally, we talk about, I mentioned the word just a minute ago, an annuity. And what is an annuity? By definition, an annuity is nothing more than an income stream. So how you structure a vehicle or collection of vehicles to create that income stream, it's up to you, or better yet, it's up to a financial person that knows what they're doing. And for me, I'm a firm believer in diversification. Everybody should be diversified. And I don't mean you should be, have all your money in the stock market and be in 10 different stocks. That's not the kind of diversification I'm talking about. I'm talking about a stock market position should be part of your investment strategy. A an annuity should be part of your investment strategy. An infinite bank should be part of your investment strategy. A CD should be part of your investment strategy. Real estate should be part of your investment strategy. And I don't mean just buying a piece of land. I'm talking about buying properties that cash flow properly, that have the correct amount of returns that you need, that are on track for you. Let's think about real estate for a second. What is it? It's a business. So anytime you get into business, you need two things planned before you start. You need to plan on how you're getting into the business and how you're getting out of the business. So that part, the getting out part, needs to be included in your strategy. Are you going to buy it and hold on for 5 years and then sell it? Avoid short-term capital gains tax, exposed to only long-term capital gains tax, make a delta, or make a difference in the cost between your mortgage, which you need to reach out to Tommy for, because he can help you get a top-notch mortgage quickly, and then use that. How many is that for me? Is that one? Is that two? How many plugs?
3 or 4.
3 or 4.
Yeah.
I got catching up to do. Right. So all right. So yeah. So you reach out to Tommy and get that mortgage that you need. Make sure you've got a strategy on when you're going to get out of the property. And then one last thing, maybe you don't want to get out of the property. Maybe you want to keep it forever and then leave it to your family. Okay, that means you're going to build equity. How do you spend equity, Tommy? Can you spend equity in a home?
You cannot spend the equity, sir,
Wow.
unless you take a stupid loan out on it. But actually, stupid loans can return a greater equity.
Wow.
And therefore, they're not really stupid.
No,
and
they're not.
You and I have watched people sitting
Yep.
on hundreds of thousands of dollars sitting in their real estate equity,
Yep.
and it's earning them nothing
Yep.
except a slight increase of,
3% per year max.
Their property value
Yeah.
is still going up 3 to 4% per year.
That's their gain.
Everybody, that's your normal gain.
And you can't spend it.
Right. You can't spend that gain.
Yeah.
But you know how to leverage safely and securely so you will never lose that equity and everything's good.
Right on. So the lesson for today, Tommy, is?
The lesson is to talk to the Forehand agency at 278
1264.
1264.
Yep.
And go to perfecthomeguy.com to get a free excerpt of the book, The Wizards Don't Know How It Works.
Love it. Thanks,
Ladies
Lee.
and gentlemen, Tommy Hines, the Perfect Home Guy, perfecthomeguy.com, and Scott Forehand, forehandagency.com. Scott's number is 757-278-1264 or 800-677-0989. And don't miss Scott's class coming up Thursday.